This week is the perfect reminder that you can't afford to flit in and out so easily. Sell. You can't just say, you know what, I'll sell everything and get back in when things are better. Remember, I told you that all week. When you do that, you end up missing a week like this, which is about as big as it gets. There's always a major reason I'm always telling you to stay the course, even as so many other commentators want you to head for the hills. Sell. It's why I presented constructive work from some of my favorite chartists this week, because they're unemotional about the state of the world. The charts have no feelings. More on that later. Remember, most of the big gains each year happen on just very few days. You have all these trading days of the year, but most of the gains occur in a cluster, and then they're over. So we must ask ourselves, will that be the case next week? Let's take a look at our game plan. All right, we start Monday as we started every Monday since the Russian invasion of Ukraine, with a slim, small hope that there's some success in the peace talks. So far, so bad. And I don't see why anything will stop Putin's advance, except maybe Mother Nature, which could make it too rainy for him to bring in the new equipment he needs if he wants to start leveling major cities. That's actually true, by the way. It's hard to imagine that sanctions alone will bring him down, but this was supposed to be a short, victorious war for Russia. So the longer it drags out, the worse it'll be for Putin's regime. I know each week can be different, and we've no longer oversold in the S&P oscillator. I just checked. So it's so different from last Friday, huh? After the remarkable run. But we won't have to wait long to find out if things are going to continue, because we have a big company that reports after the close. Dow Jones, Bellwether, Nike. And I've got to tell you, I think the quarter is going to be complicated by myriad issues, mostly involving Chinese spending. I know the Chinese stock market was good, but are they buying things? I don't expect Nike will actually have good numbers, but that's now the conventional wisdom, which leaves open the possibility of an upside surprise. All right, Tuesday. Once a year it happens. Once a year. Tuesday, CEO Jensen Huang, keynote at GTC. Tuesday's huge. This is the man I call Leonardo da Vinci. He's the CEO of NVIDIA, and he speaks at this conference for developers. I know this sounds like pure idolatry. I mean, whoever would name their dog after a company? But, well, this speech will define where tech is, where it's going, and what are the boundaries that must be smashed. And he'll smash them. Now, here's what I do. I watch it live, first of all, and then I watch it again. And perhaps because I'm just not smart enough, I watch it a third time. I am not at this man's level. Actually, no one's at Jensen's level. Even though he speaks in plain English, it's very hard to grasp what the future really looks like. The fact that he's fun, that he has a zest for life, and he's kind, and a personality, all of it will come across. I need you to watch this. Jensen doesn't make you wish that you were smarter. He does make you wish you were more curious. I find him amazing. His thinking should define your thinking. It's how I get some of my best tech ideas. After the close Tuesday, we get an incredibly important quarter from Adobe, also one of my favorite software companies, filled with creativity, as a CEO who understands how the web is a force of democratization that inspires people to tell the stories they know. Remember, we're all storytellers. We all have stories. Adobe lets you tell them. Adobe's got a real sense of purpose, which is unusual. Right now, the long knives on Wall Street are out for them, with several analysts saying there's limited upside to the quarter. I think it'll be better than that, but the standards have gotten ridiculously high for this fabulous company.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.